Now, the Federal Reserve meet on May the 3rd, and there is an increasingly bearish attitude to stocks amongst analysts, and the prospects of further gains in stocks are viewed very nervously. Despite these bearish projections, April has been a strong month for some of the major indices. You can see that the German DAX, the UK FTSE 100, Euro Stoxx 50, the Dow and the S&P 500 have managed to put in gains, with the S&P 500 putting in 0.82% of gains. So with bearish analyst reports, worries over higher rates, tightening of credit conditions, and geopolitical concerns with Russia, Ukraine, China, Taiwan, what can seasonals tell us with all these risks around? Well, they can tell us quite a lot. The old saying, sell in May and go away, is marked on the seasonal chart. You can see that May has been one of the negative months for the S&P 500 over the last 95 years. And you can see this sort of marked fall as we enter May properly. Once we sort of see the back end of the first week of May, you can see that there's a tendency for the S&P 500 to fall. So will this time perfectly for the Federal Reserve meeting? Will the Fed push back against the market's hopes of rate cuts this year? Will that be the catalyst to send stocks lower? Major trade risks. The major trade risk here is if the meeting contains a dovish surprise, which makes markets once again expect a pause from the Federal Reserve. Remember, HYCM clients can access the SeasonX product in order to analyze over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please do contact your account manager for a free trial and get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.